Hello and welcome to AI Market News by LM. So let's jump right in because we're looking at a global market that's really a tale of two very different stories. Here in the West, caution is absolutely the name of the game for US traders. But over in Asia, it's a whole different scene, with explosive debuts and major policy shifts making some serious waves. To get a feel for the overall mood, we always like to check in on the Fear and Greed Index. You can think of it as the market's emotional barometer. It pulls together 7 key data points to figure out if investors are feeling greedy and maybe pushing prices too high, or if they're fearful, which, hey, can sometimes signal a buying opportunity. And right now, the needle is pointing straight towards fear. We're sitting at a 42 out of 100. And anytime we see a score under 50 like this, it's a clear signal that investors are getting pretty skittish. They're pulling back and taking a much more defensive stance. And that cautious feeling is really playing out on Wall Street, where it feels like the entire market is just in a holding pattern, waiting for the other shoe to drop. I mean, just look at the pre-market numbers. US futures are pretty mixed and mostly flat this morning. Nobody wants to make a big bet right now because there's some really crucial economic news just around the corner. So what's everybody waiting for? Well, this whole wait-and-see game is all about the upcoming inflation data. And let me tell you, those numbers are going to heavily influence whatever the Federal Reserve decides to do with interest rates next. Okay, now let's hop over to Asia because the story there could not be more different. We can forget about caution for a minute. This is all about pure, unadulterated investor enthusiasm, and it's all happening in China's tech sector. And the main event is the absolute blockbuster debut of a company called More Threads. This is a brand new GPU designer, founded by a former NVIDIA engineer, no less, and their goal is pretty simple. They want to follow in NVIDIA's massive footsteps and really help boost China's self-sufficiency in the global chip race. The interest in this IPO was just staggering. The retail part of the offering, that's the slice for everyday investors like us, was oversubscribed by 2,700 times. Let that sink in for a second. That means for every single share available, there were 2,700 buyers trying to get their hands on it. That's one of the highest figures we have seen in years. Just incredible. And all that pent-up demand led to an absolutely explosive first day of trading. The stock price just shot up, surging over 400% right at the opening bell. It's such a clear signal of the huge appetite investors have for these homegrown AI companies. Now, shifting gears a bit, let's head over to Japan. There's another huge story developing there as its central bank is signaling a really significant and frankly long-awaited policy change. Based on the prepared resources, it looks like the Bank of Japan is finally ready to move away from its decades-long policy of ultra-low interest rates. I mean, we're talking about a policy that's been in place for nearly a generation. This is a really, really big deal. The hike everyone is anticipating would bring the rate up to 0.75%. Now, I know, that might not sound like a lot compared to rates in the US or Europe, but for Japan, it is a monumental shift. And what's super interesting is that officials are also hinting that this isn't just a one-and-done deal. They're setting the stage for more hikes to come. So, of course, a potential move like this from the Bank of Japan has immediate and massive implications for one of the world's most watched currency pairs, the US dollar versus the Japanese yen. The big question is, how are traders playing this? Let's take a look at how they're positioning themselves in the dollar-yen pair in response to all this chatter. It's kind of like a fascinating game of chess unfolding in real time. Well, the currency market, as you'd expect, reacted in a flash. The yen gained strength against the dollar almost immediately. The pair dropped from trading around 155.15 all the way down to 154.80, just on the prospect of higher interest rates coming to Japan. And if we peek into the Owanda order book, we get a great look at the trader mindset. You can see these big clusters of sell orders sitting just above the current price, creating a sort of ceiling, or what traders call resistance. On the flip side, there's a floor of support being formed by all the buy orders sitting just below. It's interesting though, the majority of open positions are still long, which means most traders are still betting the price will go up. But that could change very quickly as this news really starts to sink in. Okay, let's zoom back out and take a look at what's on the economic calendar, because that's really going to drive the market narrative for the rest of the day. According to the schedule on investing.com, we've got several high-impact data releases coming out of the US at 10 a.m. Eastern Time. And believe me, these could really set the tone for the entire market. So, what should we be watching? Well, the big one is the core PCE price index. This is the inflation gauge the Fed really pays attention to. Then we've got personal spending and consumer sentiment. All together, these three reports are going to give us some critical clues about the health of the US economy and where inflation might be headed next. Which, of course, leaves us with the critical question for the days ahead. We've got central banks making big moves, we've got key data on deck, and we have this wild split in sentiment across the globe. So, is the market bracing for a massive breakout, or is it getting ready for a breakdown from all this uncertainty? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.